Hey everyone, today we're going to be talking with Gwen Preston, the VP of Communications over at West Red Lake Gold. Lots of news coming out of West Red Lake Gold. This is a fun one to watch and cover because a little bit of drama, because it's a restart of the Madsen Mine from Pure Gold. So you have like the haters and forums going, this will never restart. There's nothing to be done here. So a team going, no, we think we've got something. And it's gone from that kind of I guess, kind of a dramatic story into one of just hitting milestones and doing what they say they're going to do. And it's very, very cool to watch because I'm always a big fan of watching, a team come in, see a vision and proving it up. And they've done just that. So we've got lots of news just the last few days between today's great news release, the bulk tonnage release, and just overall great gold markets. We get a chance to talk with Gwen and get the overall perspective of what's happening here in the sector, and especially with this on track to full on production story. How's it going, Gwen?
Today, it's going really well, Andrew. Thanks for having me on. Thanks for anybody who's tuned in. It's going really well. Like you say, it's been busy days here at West Red Lake, but the culmination of, or maybe it's not culmination, nothing's over yet. The sort of, we've achieved a bunch of really big milestones lately, which is so satisfying, right? And you say, I love the way you captured the story. It's a sort of a dramatic story. There's the haters out there, and and then we're the team that's just doing everything we can to deliver. And I mean, there's a real underdog mentality in this office, like for real. We are just really, really committed for our own sakes, for our shareholders' sakes, on proving that we can do this. Like we did this, we bought this mine because we believed that we could unlock it, and we're just going to go ahead and do that. And it's been really nice over the last week to be able to put out some really important news on that front, and just to be, one important big step closer to putting this mine back into production.
Yes, and there's tons of those little wins all along the way as well that we can touch on as well, and then some of the major ones. And I won't steal your thunder, but regarding the cost savings in types of moving away from type of slope tonnage, what we call it, to production rather than
going to a wider mining method, basically.
Yes, basically water. But we won't jump into that just quite yet because I want to kind of start and just remind people of where, like, how this story has kind of come about again, because it's a big fun story, and it has all of those kind of ingredients of the drama as well, because you're in like a historic, world-class region, which is always positive. You've got lots of interesting neighbors, to say the least. And it isn't a small kind of story. It's one with continuous upside potential. So even when you've posted, I think it's 1.7 million ounces, that's not the be all end all of the story. Like, we've got 6-year mine life or anything. Is that no, you're continuing to build. And of course, over the overarching, I'll say, not to be too promotional, a consideration with the markets the way they are, and with the free cash flow from your Newmonts and your Agnico, is that likely people will be paying attention to this exceptionally near term. Like when you hear near term stories, this is like, no, this is really near term.
This is like next week near term.
Near term. There has to be like a new term for near term that means in a week or two.
Yeah, for sure. I mean, this is a story with like you sort of captured there, like a really cool backdrop, like how it all came to be, a big thrust of work that's taken it from where it was to where it is today. And then, a lot of potential for it to become more than what we're able to present right now, as we, start into production and then have cash, and then can, dive into a bunch of the opportunities that we see at the site. So the backstory here is that the Madsen Mine, historic mine, right, operated in the 40s, 50s, and 60s, produced 2 million ounces of gold from rock that averaged like 9 grams per ton. That's classic Red Lake gold, right? I mean, Red Lake, they're actually celebrating 100 years of mining in Red Lake this summer, and that this is why people mine in Red Lake. It's not the easiest to mine, which is to say these are narrow veins, so you have to work hard to understand the geology. But if you do, those veins reward you for your effort, because they can carry very rich gold grades. And If anybody wants to pull up our share price today, West Red Lake is doing nicely today, sparked by our latest set of drill holes, definition drill holes that are into our known resource, but that included some really wonderful hits. One of them, I think, was 49. I'm doing this from memory. 49 ton over 18 meters. I mean, that's a really, really lovely intercept. So
yes,
Red Lake has this really can produce some very rich gold systems. That's why it's worth the effort. And so that was the Madsen Mine produced historically. Then, low gold prices, it went quiet for quite a few years. The important next part of the story is a company called Pure Gold, who bought the mine in 2014 and did a bunch of very good work. They did like 180 kilometers of drilling to define the resource that you mentioned, Andrew, the 1.7 million ounces of indicated gold and in rock averaging 7.4 grams per ton. So really nice resource, all in and around the old mine. So like in and around the old workings in the old shaft. And they permitted the operation, and they built a mill that's a very good mill, and they put it into production. Unfortunately, in the latter part of that process, they started to, I'll say, cut corners. And really, it was all driven by the fact that they wanted to put this thing into operation on as small a budget as possible.
Yeah.
And so that meant that they didn't do quite a few things that would have helped them succeed. And so I think that there's the geology side of that, and there's the infrastructure side of that. On the geology side, they just didn't do the definition drilling. So they tried to mine the resource, that 1.7 million indicated ounces, but that was defined with drill holes that were about 20 meters apart. And there's been 30 million ounces of gold mined in Red Lake over the last 100 years. And the rule of thumb is that your drill holes have to be like 7 meters apart. That's the thing about these narrow veins, right? You got to do the work. And so because their drill holes were far apart, their resource model just wasn't sufficiently accurate for them to mine the right rocks. And so instead of delivering 9 grams per ton to the mill, they delivered like 3.5 grams per ton to the mill. So that's not a recipe for success for sure. No. And then the other side, so that was the geology corner cutting that really didn't work. And then they also did some infrastructure corner cutting, which is to say that there were projects that they could have done that would have made the mine more efficient that they didn't do because they didn't want to spend the money. And there were things that often would have been built as part of the build and been capital cost that they instead leased and therefore pushed the cost into operating. And the combination of that, not having efficient setup and pushing cost into operating, meant that they were an inefficient high-cost mine. So lower grade, way lower grade than expected at an inefficient high-cost mine. You don't need to be a chartered financial analyst to guess that unfortunately didn't work. And it was a really sad story for a lot of investors who had gotten excited about the possibility of a new high-grade gold mine in like a storied gold district.
Yeah.
And unfortunately, Pure Gold entered bankruptcy.
Yeah. And
so then the mine went to the senior secured lender, which was Sprott Resource Lending, who had loaned Pure Gold the money to do the build. And then Sprott sold it to us. And that was just about 2 years ago. That was in June of 2023. And we bought the mine because we believed that doing appropriate geologic work, so doing the definition drilling and having a good engineering geology feedback loop, so making sure you mine the right rocks and mine them the right way, and then putting the money and the effort into doing those infrastructure projects that hadn't been done, could unlock the value that was lost when they cut those corners and it didn't work. And so that's the work that we've been doing for 2 years. We've been pushing really hard to do all of that work. We've done 90,000 meters of definition drilling so that the first almost 2 years of our mine life that work is essentially done. We've done a bunch of capital projects to set the mine up for efficient operations. And then we recently, you referenced this, and I'm sure we'll dive into it, we tested that geology work with a bulk sample, which is, we mined part of the deposit and we tested whether the whole process worked. So we've done all this work and we're right now on the edge of about to turn this mine back on again. So that's the backstory. And then there's the vision ahead, but we'll get to that.
Yes, and that's a tougher story. I mean, as we all know, mining is tough. Certainly, exploration is tough. People like to hear like a new story, a greenfield project. Oh my God, we hit a big hole.
Sure.
So there's a bit of drama with. Well, we're going to look at this in a different frame of mind, and we're going to do a lot more infill drilling. In one way, it draws a lot of attention because you're going to get people that are controversial say, in my opinion, this will never be a mine or this type of thing. But it's a challenging story to that degree of we think we found something compared to the old team. But once again, it makes for an interesting story because it's got all those factors going in, and also because along the way, you've proven it up. So let's kind of jump into that with talking about I think you've got 4 analysts, and they are all very, bullish and all impressed. And we've covered a bit of a synopsis on our own website. You could look at those different analyst consideration, but they've really kind of seen this technical validation that you guys have brought forth just a couple of days ago, especially with this bulk sample. So maybe kind of touch on that and what it's kind of reassured people or really proven.
Yeah, for sure. You mentioned analysts. This conversation that we had about convincing people and there's naysayers just made me think. I'm in the midst of organizing an analyst tour that I'm bringing a bunch of analysts down to site in about a month, and I'm getting some analysts down there who are naysayers on the project because we're we are underdogs and we believe really strongly in what we're doing, and we're bringing them to site to convince them. So let's see if maybe in 6 weeks or 8 weeks, I can add to the analyst count. That's certainly one of my goals here. But okay,
the bulk sample, I like it. Yes.
The bulk sample is super important here.
Yep.
So we've spent the last 2 years telling people that the entire thesis here is you do the appropriate geologic work, you do the definition drilling, you do the engineering properly, you do the mining method properly, that if you do that work, that you can successfully deliver the expected tons and grade to the mill. So mining can deliver what the model says. That's been the thesis. That's what we've been trying to convince people of for the last 2 years. Well, not surprisingly, I'd say validly, given that this mine failed not that long ago under a prior operator, there's people who wanted proof. They didn't want us to just tell them, they wanted proof. And we also wanted to confirm our approach. And so that's why we structured the first part of mining at Madsen as a bulk sample. This really is simply the first 15,000 tons of mining at Madsen. We carried on. As soon as we finished mining the bulk sample, we started slowly because we were getting our crews going, learning as we go, in terms of that was one of the really important benefits of doing this test mining process, is we were able to ramp our crews up and test out some things. And so that's been useful. But really, we mined this bulk sample and then we carried on mining, and we've been building up a stockpile. And so it was really just the first 15,000 tons, but we did it in a very structured way. We had independent people watching us. They came in-house. They saw our in-house, detailed engineering, our stope designs. They watched us mine it. They watched us process it. They watched us crunch the numbers so that they could validate that our model said that Stope 1 would have this many tons at this grade, Stope 2 would have this many tons at this grade, and so on. And then they watched us bring those to surface, process them, and now we can report that Stope 1, what we actually got out of Stope 1 in terms of ton and grade, and Stope 2, and 3, 4, 5, and 6. And we did 6 stopes in 3 different parts of the resource. We did that so that it's a representative sample. This wasn't just going into one spot where we had done a particularly large amount of work so that we could, guarantee that it would happen. No, Austin, South Austin, and McVey are all parts of the resource that we will be mining in the next year. And we pulled these tons out, and really excitingly, basically it reconciled perfectly within a few percent.
Yes.
And when you think about the fact that this is Red Lake mineralization, where there is, to use the technical term, high grade variability, right? That just means it's nuggety, right? Yeah. And so a nuggety system, you have to do the definition drilling to make sure you're in the right zone. And you have to find that balance. Yep. What is the right amount of definition drilling to make sure that you're in the zone without doing like too much definition drilling, which essentially would be wasting money? Did you find the right balance, and were you able to deliver to expectation? And we did. And so this was our first chance to offer proof, and we offered it almost perfectly. And now we're just going to carry on, which is to say, we offered our first set of proof. We continued mining to build up the stockpile, and we expect in the next very soon, that was a time frame, in the next few weeks for the board to say, yep, green light, let's do this, and to move into operation. And then over the next second half of the year, as we ramp this operation up, to be able to report to the market, maybe on a monthly basis, okay, this month we delivered this many tons at this grade, and then this many, and just keep building that pile of evidence to prove all the naysayers wrong.
It's pretty wild. I mean, I just looking at the actual data here, like the tonnage here, you predicted 15,170, actual is 14,490. I mean, that's so close. The grade 5.68, the actual is 5.72. Like, it's really wild to see like how super close the prediction and the actual was for your model. And that also gives a ton of confidence to the analyst, but to anyone else out there is saying like, no, their model's very, very accurate. This is very, very promising.
Yeah. And I would say, I mean, if you break it down into area by area, the widest gap was in the McVey area. And McVey is, first of all, the smallest part of our resource by a lot. It's quite a small area. It's worth the effort because it's quite high grade, but it's small. And secondly, McVey is the most geologically complex part of the Madsen system, which is to say it's been more folded and the gold's been remobilized. It's more nuggety up there. And so that's the area where if before these results, before we started this process, if you had to ask me or, Will or Jill, our chief geologists, where they expected to have, where the grade variability is highest and therefore the challenge of delivering precisely to the model is going to be the strongest, they would have said McVey. But importantly, we were still very close. And I am comfortable saying that there was just as good a chance that we could have come over 7% on grade as under 7% on grade, because that's what grade variability is. The definition drilling is to make sure that you are in the zone, right? Yeah. And when you're in the zone, you're mining the right rocks. In this part, then maybe there's not quite as many nuggets of gold, to use that term, and then you move to this next part and maybe there's a few more nuggets of gold. That's what grade variability is. But as long as the definition drilling means that you're mining the right rocks, then you're going to get the benefit. You're going to get it, right? You're going to get the gold that's there. And so McVey, again, people were like, oh, you missed by 7% on McVey. We're okay that we missed by 7% on McVey. McVey is a very small zone. The areas that are the meatiest parts of our deposit, we're really, really comfortable with how close we were there. Yeah. At the end of the day, what I've been saying to people is that the results of this bulk sample mean that we are changing nothing in how we're approaching this. And that's the most important outcome. It's validated what we're doing. If there had been a miss, even on the upside, even if the grade had come in way above, that would still mean that our model was not accurate. People might have thought that was a good thing, but actually we would have been a little worried about that because it would have meant that our model is not accurate. Instead, everything lined up, and it means that our workflow is confirmed and we can just carry on, which is great because that is precisely the workflow that we have already implemented to flesh out the next 18 months of tons that are definition drilled and engineered. The work's already done. So really confirmed a lot of work that's already been done and how we'll go about doing the work for the next, for the many years to come.
And certainly making analyst life a little bit easier is having more of that certainty of, oh, this model is accurate. We think we believe the tonnage they're going to pull in. For anyone who really is heavy to the numbers, that will give them, and of course, like really detailed focused investors, your institutional investors, a lot of easy breath to go, great, this is very comforting. I would say equally, maybe not equally, but certainly as weighted importance is this cost-effective mining methodology as well. So I kind of muffled it a little bit, but adopting a longhole stoping over cut and fill mining is a very heavily weighted, significant aspect too that maybe you could touch on.
Yeah, for sure. So this is a really important consideration. So we put out our pre-feasibility study, which is our mine plan, at the beginning of the year. And that mine plan generated good numbers, using in the financial model a gold price of about $2,600. It gives this thing almost a $500 million NPV and $94 million in annual free cash flow. So nice. It was a positive study for sure. But the other gold price that really mattered in that pre-feasibility study is the gold price that they used to first decide which of the tons of the resource should make it into consideration for the mine plan. And you can call that like an economic viability hurdle, right?
Yeah,
so if you put like a generalized mining cost on this resource, it costs at least approximately this many dollars to mine each ton. Only the tons that made it over that hurdle then were in the running to be in the mine plan. And that hurdle, the gold price for that hurdle was $1,680, which is, a modest. That was a backward-looking gold price. That's what happens with these technical studies. It's not, it wasn't an odd decision. It just is the nature of the beast. But it created a mine plan that was really focused only on high-grade gold because it kind of translated to a cutoff grade around 4 grams per ton. So broadly speaking, all the tons that graded of our resource that graded less than 4 grams per ton were not considered. They were not even considered as they built the mine plan. And that created a mine plan that had, relatively speaking, some reasonably small stopes, very high grade stopes, but small stopes. So you had to sort of develop over to this one and then mine a relatively small stope and then develop over to this one and mine a relatively small stope and so on. And that was the nature of the mine plan. And so that mine plan only took the highest grade stuff. It worked its way down through the deposit quite quickly because it kind of took the eyes out, so to speak, and left the rest of it there. And sort of, that's how it was structured. Gold is worth a lot more than $1,680. And the way mining works is that you have your mine plan, your feasibility study or your pre-feasibility study. And then every mine always does a bunch more work after that study is done before they're actually mining. You don't mine. This is not the feasibility or pre-feasibility study isn't sufficiently engineered for mining. You always do definition drilling and then you always do detailed engineering and then you do mining. That's the way it always goes. As that's an economic process. So you do your definition drilling and the detailed engineering is about deciding what's the best economic and geologic safety, of course, but what's the best economic way to design how we're going to mine this thing? And so that also uses a gold price. So if you use a gold price in that stope design engineering that's higher than $1,680, we're currently using roughly the long-term consensus gold price. So right around $2,300, right?
Yeah. If
you use a gold price more like that, what it essentially does is pulls in a lot of cases, there's mineralization around those high-grade lenses that's maybe 2 grams or 3 grams. And what you can therefore do is connect this lens and this lens with, call it a halo of mineralization. And so instead of 2 relatively small lenses, you end up with one big stope. And that matters. It matters for 2 reasons. One, you don't have to develop to this one, mine a little stope, and then develop to the next one. So it reduces the amount of tunneling. That's what I mean by develop. You have to do to get from one mining spot to the next mining spot. And access development is expensive. So having to do less of that is important. And also, bigger stopes are less expensive to mine per ton than small stopes. And this is what you were mentioning. So small stopes, in the context of the Madsen Mine, have to be mined by cut and fill, which is essentially just you develop a lower sill and an upper sill that are only about maybe 4 meters apart. And then you take this mineralization that's between the upper and lower sill, and then you do the next layer and then the next layer. Longhole stoping, your upper and lower sills are more like 20 meters apart. So you basically just get to, for the same amount of work, development of those accesses and development of those sills, you get to take a whole bunch more tons. And so the difference ends up being that longhole stoping, which is the only mining method we actually used for our bulk sample, and it's the only mining method that we actually have in play for our 18-month mine plan, is about 50% the mining cost per ton of cut and fill mining. And so that matters,
huge.
Right?
That's huge.
So 60% of our PFS mine plan was cut and fill. I'm sure we will still use cut and fill in places because that's what the shape of the thing will demand.
Okay. Yep.
Against cut and fill in and of itself. What we are for is economic mining. We are for maximizing the economic benefit from mining this deposit. And so if we can do it with a lower mining cost, take bigger stopes, mine more ounces, it will end up being lower grade for sure. But if it makes economic sense, then that's the decision that we're going to make. So that's a big conversation. And yeah, you've pulled up a chart here that is how I try to capture that opportunity in a picture.
Yes.
Which is these blue bars. The one on the far left that has an arrow pointing to it that says current reserve, that is, as the name suggests, what the current mine plan, the PFS mine plan, has in it. That reserve came from the second blue bar, and those are the resource tons that are considered for the reserve. So those are the resource tons that made it over that economic viability hurdle and then got considered for the mine plan at $1,680. That's why it says 1680 cut and fill and long hole underneath that second blue bar. If you increase that economic viability hurdle to 1900 or 2100 or 2400, like underneath those other blue bars, then the number of tons of the resource that come into consideration for the mine plan increase significantly. So that's sort of like, instead of taking out the eyes, you're just eating more of what's available at the Madsen mine. That's sort of the big takeaway.
So it's great using the magic of gravity to help you, and that means I guess fewer cycles and less labor as well. So
yeah,
like just a whole bunch of wins there. That's such a huge, I guess operational lever or leverage.
Yeah. For sure. And like I say, like when you're doing the cut and fill, you have to develop those tunnels above and below, and then you take the mineralization in between, and then you have to develop another tunnel and take the mineralization. For long hole, you're just developing fewer tunnels, right? Because your above and below are 20 meters apart instead of 4 meters apart. So like that's far fewer tunnels, sills that you have to develop to take the tons. So yeah.
Pretty cool. I mean, so what does the, because once again, I always like to remind people that, yes, you have these numbers, you have the analysts will work on these numbers, but it isn't the end of the story. Like, this is all that's there. Is it? No, you've got 40 kilometers worth of strike length that you could go poke around as well. So tell us about the exploration upside here. I know we're getting a little bit forward thinking, but let's have a little bit of fun and just remind people that, listen, this is where we are. We're in Red Lake. So where can this go?
Yeah, for sure. I mean, I love having this conversation. It's not a conversation that I get a lot of opportunity to have these days because, of course, we're so focused on getting the mine going.
Yeah.
But absolutely. I mean, Will, our VP of Exploration, has a very strong list of targets that we will go and test just as soon as we can ease up our focus on mine restart and have a little, and once we have a little bit more cash flow to just support it. So the exploration targets start in the mine itself. And we're doing that work now. So like we will always be doing this definition drilling to make sure that we flesh out that we always have 2 years of mineable tons ready for us. As we're doing that definition drilling, in some places you do the definition drilling and then you're like, that hole on the edge of the resource turned out very well. Let's keep going. And then you find, and then a zone expands. So there's expansion within, like right in and around the resource itself. So that's one area. There's lots of opportunity, and there's a couple images in our presentation that show some of the areas of the resource where Will and Jill, who's our chief geologist at site, see really good potential to grow the resource right in and around where we're already planning to mine. So that's one thing. Then you talked about strike. So the Madsen mine really sits where two big rock types come together, the Balmer and the Confederation rock types come together. It's like right associated with that unconformity, so to speak. And if you go, there's a periodicity along that unconformity where roughly every kilometer there is some mineralization. And so that hadn't been super well recognized until Will took a look at it and came up with that approach. What that led to last year was Will drilling a target called North Shore, which is 1 kilometer north of the Madsen mine. There was a geophysical thing that showed up. It related to this periodicity. There was an old soil anomaly that aligned. So he went up and drilled it, and he hit like 150 meters of rock that looked like Madsen. Like the veining, the alteration. He came in and he was like, did I just discover another Madsen? He did not, to be clear. The gold grades were fairly low, but at the same time as the drilling was happening, we were doing a fairly extensive till or soil sampling program across the project. And the results of that came back and showed a target that's just slightly shifted to the west compared to where he had drilled. And really interestingly, the new slightly shifted to the west target sits right on top of where there's an ultramafic sill. So the ultramafic rock is another kind of rock that comes up into the Confederation or the Balmer rocks from in various places. Ultramafic rocks can be really highly mineralized themselves in Red Lake, or the hanging wall, so where the Balmer rock comes up against the ultramafic rock, that is a very classic location to find high-grade mineralization in Red Lake, the hanging wall of an ultramafic unit. So now we have a soil target that's right on top of the hanging wall of an ultramafic unit, and it is shifted slightly west, like 200 meters west of where Will pulled really nice looking rocks, Madsen looking rocks out of the ground last year. Not surprisingly, that is our top regional drilling target. So we're pretty excited to get up there. It's not going to happen this year, but next year we're really excited to get up and see if we can find something else there. I mean, then there's other targets at Madsen itself on the Confederation side of the land package where people for a long time didn't think that the Confederation rocks had gold in them. Well, Great Bear is a story that turned that idea on its head. And so that soil sampling program outlined some really interesting targets across the Confederation rocks, which is half of our land package. And then if you want to talk about more things that we can pull into the Madsen mine, there's the Rowan project, right? So Rowan is 30 kilometers away as the crow flies. It has 300,000 ounces. 2/3 of that is indicated, grading 12.8 grams per ton gold. It's an underground, it would be an underground mine, but it starts right at surface, as you can see right here.
Yep.
And that's really nice grade, right? 12.8 grams per ton is very nice grade.
Yeah.
And there's a lot of drill intercepts that are just outside of that resource. So Will's hypothesis is that it doesn't take a lot more drilling to likely grow that resource by pulling in some intercepts that are just outside of where the resource is right now. And then you can see, like, to the east there's that blob. That has 2 hits in it. Those are some nice hits. And it looks like there's other drilling, but those other drill holes are actually in and out of the plane. They don't test that blob itself. So what's over there? There's some like 20 and 30 gram per ton hits over there. So what's that? And then similar to at Madsen, where we did a soil sampling program, we did a soil sampling program at Rowan, and there's some two nice targets that popped up there called Big Bend and Apex. So we are not short on targets that we would love to go and test. Once we have the Madsen mine up and running comfortably, and we can just take that moment to breathe and take a little bit of capital and go out and test some of these things. Like you say, this is Red Lake. People have been mining here for 100 years for a reason. The rocks are really awesome.
And I'm glad you brought up the Great Bear thing as well, because Kinross has mentioned how impressed with what they're finding and what they're discovering there as well. Everyone knows the Great Bear story, selling it off, but they're very happy with what they've purchased, and that just kind of buoys the story of, listen, just because you bought an asset and it was a fantastic asset, that story continues. Even though a lot of people just kind of move on, they go, "Oh, I made some money, I've moved on from it." It's like, no, that story is continuing, and it's doing very well and very exciting. And that's what's so wonderful about this region, about this type of company, and the fact that you guys have proven up the model accurately to date, is that people can then feel a bit more confidence that, okay, I know you guys have got your hands full with a million things to do, but also people can go, ooh, a year from now, there'll be cash flow. You can be poking all sorts of holes over there.
And I mean, we can be poking. Yes, for sure. We'll have the cash flow to be seeing what else is there. And also just conversations like this, where we lay out the targets and the opportunity once there's cash flow, really matters. You're referencing Kinross buying Great Bear is what made me think of this. Like, the gold market is doing phenomenal things right now.
Yeah.
And gold companies produce mid-tier and major producers are making a lot of money right now. And it's not a new conversation to say that their new project pipelines are in a lot of cases not very full. And so, a new single asset gold producer, like one of three things happens when you're a single asset gold producer. You fail, you get bought, or you get bigger. Those are the three. You don't stay as a single asset gold producer.
Yes.
One of those three things happens. And so us trying to help everybody understand the reality of what Madsen has to offer, what the mining is right now, and what the opportunity is that we see around Madsen. I mean, we are not trying to get bought. We want to unlock a lot more upside for our shareholders. But, it's all part and parcel of the same thing. We got to unlock, we got to show everybody where we're going so that we can hopefully get the market credit for that. And I'm sure mid-tier mining companies are watching, because there's very few new gold mines going into production in 2025. Like, there's just hardly any. We went through such a grind of a bear market that the vast majority of projects stopped. They didn't make enough progress to be going into production now. So there's not very many, opportunities out there. And so, we're very aware of that for sure.
I think there's only I'm going to guess here, 4 that are even consideration.
There's only 4 if you look at single asset companies.
Single asset
companies that are going from developer to producer. So there's other mining companies that are bringing a new mine online, but if you look at companies that are putting their first mine into production, there's 4. There's Artemis, which has already done phenomenal things. Certainly, their share price chart is a thing of beauty. And then there's Erdene in Mongolia, there's Robex in Guinea, and then there's West Red Lake in Canada. Those are the 4.
Let's talk a little bit about just the gold sector and the gold market and what's happening there. Because then, even though you're saying you're going to develop this, we'll put on the investment banking hat and talk about regardless of whether or not you guys want to entertain the conversation, I'm sure you've got, between analysts and other companies, like you said, mid-sized, looking, going, well, would you entertain an offer? And we can put on that forward-thinking, discussion here. But let's just talk about gold in general, because it sets up this, a discussion about the cash flow that, the likes of a Newmont or Agnico or a Barrick, even though they've changed their name, they might be looking at assets, and I'm sure if it's not them, someone else looking at, what can we add? Who's a neighbor? What would be an interesting, asset to our portfolio?
Yeah, for sure. I mean, the gold market is such an interesting space right now. I think that the most dominant characteristic of gold miners right now is how much money they have. It's just it's actually silly how much money they have, how much money they're making, how much money they have. They hardly know what to do with the money that they have. And I'm laughing, but it is actually almost silly. I would say I, as an individual, as a gold bug, I hope that they lean a little bit harder into dividends. And I say that because I want the gold mining space to develop as much broad-based appeal as it can. And so if it can develop that through also appealing to investors who will love dividends, and that's a big market of investors, I think that's a great idea. So I hope that they do more dividend paying. But even then, they have so much money that they can do more than just pay more dividends, and they will for sure. And we've seen lots of interesting, just on Monday, was it just yesterday? Pan American Silver bought Mag Silver, right?
Yes.
There we go. These deals are happening. We've seen quite a few of them over the last few weeks, even. And so it's happening, and that's good. That's part of how a bull market develops, is that, the major companies start making the money. They have the money. They can do the acquisitions. Investors get returns. They can rotate that capital elsewhere. Hopefully then all of that money is also going into dividends, bringing more people into the space. And our gold space is just so small relative to other sectors, other investing sectors like tech, that it only takes a tiny portfolio allocation to have, from generalist investors, to have outsized influence on a sector as small as gold mining. So I think, I really believe that Western investors are starting to pay attention to gold equities, which is not something that has been true. That's not a statement that's been true for many years. They're paying attention to gold now. And I think that Western investors, hand in hand, when they pay attention to gold, they always pay attention to gold equities too. That hand in hand relationship doesn't apply to the investors who pushed the gold price over the previous few years, because that was central banks, that was Middle Eastern buyers, and that was Chinese buyers, and that was a whole bunch of investors who don't buy gold equities when they buy gold. They prefer the metal. They don't play the equity space. But now we have the Western investors who do the two together, and so there's real potential for that. For call it a catch up, a re-rating of the gold equities that's been lacking as the gold price has done incredible things and gold equities are slow to catch up. I think that catch up is now underway, because there's Western investors are being given sort of one reason after another to remember that gold is the best diversifier of all.
Truly. And if I just jump in with the boring background of banking regulation, Basel 3.
That was a hilarious segue. And I know where you're going and I love it, but that was hilarious.
I was like, who pays attention to Basel 3? Who cares? But it does. It's very, very important. Because people ask like, oh, well, I'm retail. Is this the end of the party? And it's like, no, I would argue it's just getting started. It hasn't even had like a plateau. This is lifting off. And I think it's JP Morgan or Goldman Sachs said they expect by the end of the Trump presidency a 6,000 gold, which
I saw that just this morning, $6,000 gold price within a couple of years.
Pretty cool. 6,000. And that's not me. That's not my analyst opinion. There's nothing. Yeah. And what's interesting here is this Basel III boring regulation thing, because it allows banks to now value gold at 100%. Now that's going to help a lot of banks that already have it. It certainly helps all of these BRICS nations that have been hoarding gold and buying it.
Yeah, exactly.
But this means now that even your bank, your RBC, your CIBC, they go, wait a second, hold on, I don't get 50% of the value of my gold. I got 100. Now it's a little bit more entertaining to maybe go, yeah, we can offer this now. This is retail. That's a small, well, I didn't even say it's small. That's a big factor. That is like I said, very boring, but behind the scenes, that's momentum.
Banking regulations have a huge impact on capital flow. So if you think of like junior mining is what I know best, but like, okay, so a lot of US investors are not allowed to buy like their investment banks or their wealth management or, the avenues through which they transact stocks, don't let them buy stocks that are not listed on one of the US main boards, the NASDAQ or the New York, and are valued at less than $2 a share. And like the vast majority of mining companies don't meet that bar, junior mining companies. And so that dramatically restricts the capital that is available, that has the opportunity to flow into those stocks. So banking regulations, and I think that that's been an important factor, over the last decade, while the overall stock market, the NASDAQ, the New York, like the S&P, while they went up, and junior mining was left behind. I mean, I think the fact that junior mining is so junior and didn't meet those bars, I think that played a role. Banking regulations matter. And the fact that this has validated gold as, something that banks can really, truly lean into with their investors, I think it matters a lot.
It's pretty cool too, because if you look at the connection then to someone say it's very near term, and I'm not making anything here. I'm just saying, if you are a banker, investment banker, you're a niche fund, and you go, wait a second, we've just added 50% of value that we can go after. That makes an offtake agreement with a near producing mine very attractive conversation for someone as well. So all of a sudden, the behind the scenes financing situations that happen with either late stage mining, gold mining projects, but certainly near term ones, quite interesting and compelling.
Yeah, for sure. I mean, and the more sources of capital that there are, whether you're talking about project funding, whether you're talking about investment capital, like the more sources of capital that are available to a sector, the healthier that sector is going to be. And there's going to be, within that range of sources of capital, there's going to be ones that are more burdensome and ones that are less burdensome. But the more sources there are, the better, because it's just a bigger playing field. So for sure, it's an important change.
And all of that just buoys that whole, idea that once banks get more comfortable with it, which they certainly are, brokers are going to mention gold a bit more to people as well. We've seen just the headlines too, just on a retail level, of like Costco selling out of gold bars. I mean, that is a very good indicator. That for us, it probably feels like, oh, we've been on such a tear for 7 years in gold. And it's like that maybe we're midway through, a quarter of the way through. And I would suggest that there's nothing on the economic horizon or the debt ceiling or anything that's saying, oh, we're in the clear, everything's okay out there, economically speaking.
Exactly. No, I mean, when I said before, investors in the West just keep being given more reasons to remember why gold has so long been part of everyone's portfolio. Like the reasons just keep piling on. I mean, like economic uncertainty is rife right now. I know that from one day to the next, and Trump's visit to China, and these things ebb and flow. Absolutely, they do. But at the end of the day, there's been some dramatic changes to macroeconomics, and most of those are projected to have negative impacts on growth. And so that's risk. That's real risk, right? Especially when you put that in the context of an S&P or whichever index you want to look at that's been rising inexorably for a decade, right? That's an interesting combination. That's a combination that makes you want to make sure that you have some diversity in your portfolio in case, right? That's what gold is. Gold is the in case. And as soon as investors are being given one reason to think to get, prepare, okay, but when they're being given sort of reason after reason after reason, and those reasons aren't, like you say, they aren't old and tired reasons. They're sort of very new and active reasons.
Yes. And typically, and this is not a dig at producers, but when they've got tons of cash flow, and when we look at other cycles in the past, they tend to overpay for assets sometimes, let's just say. It's interesting then, if I put on or the investment banking hat now on and say, okay, you guys want to develop this. You don't need to sell out. Like there's lots of projects out there that say, listen, we're exploration, we intend on selling, and our team moves along. You're saying, no, we want to develop this. So that sends an interesting message out to those that would be possible suitors, that we don't need necessarily, like, you're not going to come in and just say, hey, here's an offer, what do you think? You're like, no, like we're going to be mining this, thank you very much. I would imagine, take a significant discussion to get you to not want to engage and keep growing this thing. I mean,
so I have to give the answer that
this is a very loaded question or discussion. So
at the end of the day, we are absolutely 100% mandated to make the decisions in the best interest of our shareholders, right? So if a major mining company came and offered us a 40% premium, that's not a crazy number, a 40% premium to buy us out right now, we would absolutely take that to our board, and that we would have to let that process play out. At the same time, we are really motivated. We believe, first of all, that there's a lot more value to unlock at Madsen. Yes. So we think that if we can just keep going a bit longer, that we can unlock more opportunity potentially before that 40% takeout. That's one, way of looking at it. Yeah. We also believe that we are a team of people that Shane Williams pulled together who are unusually experienced in putting mines into operation and operating mines and building companies. And so we want to be able to flex that experience and create more value for our shareholders through that, because that's another big, piece of the West Red Lake puzzle, is that we have that ability. Like I said, at the end of the day, we're always working for our shareholders, and we will respond to whatever comes in our door based on that job. But we're not going to sit around and wait for someone to make us an offer. We are going to try and unlock as much value as we can at Madsen, and then add as much value as we can to West Red Lake gold mines as quickly as we can, because this gold market is happening right now. So yes, that's the answer.
And you're going to have a ton of news flow. I mean, I know you guys, you're super busy. That you've got your hands full. Never mind these conversations of the what ifs, but but it's a fun one for anyone watching, because yes, they need to know the metrics. They need to know that all the analysts are on board. They agree with the stooping idea. They agree that it's a 50 to 60% cost savings. So these aren't just hyperbolic conversations, but it's fun to then look and go, this is what we know. This is the data. This is the fact. Our thesis is 100% valid, and here's where we're going with that model moving forward. But let's imagine a little bit as well.
Yeah, for sure. I mean, and that's what keeps you going, right? Like putting a mine into production is hard work. It's really hard work. There's a lot of details. There's a lot of questions. There's a lot of things that go wrong that have to be fixed. It's a lot of work. And so I can't say, I'm not trying to ask for sympathy. It's been hard work. We've been working really hard for a couple of years, but what drives you so much for this team are a few things. First of all, the fact that we're now right on the edge of, and I mean the share price today, we're talking at a pretty exciting moment for the share price. I've noticed in my window somebody's head poked through twice, which is somebody who likes to come and make sure that I pay attention to the share price, which is doing fantastic things as we're having this conversation. But unlocking value for the investors is really motivating. Unlocking opportunity, unlocking this reviving this opportunity for the community of Red Lake is so gratifying, right? There's so many good people in that community who are deeply mining experienced and who are so excited to be able to work at home. So for the community and the area of Red Lake, and then for the potential of what we can create, when we sit together and have team meetings and talk about this idea or this possibility, or what do we think of this, that stuff's fun, right? And so you got, that's a big part of the driver, get through the hard work for all of those reasons.
Yes. And I figured that would be a little bit more fun for you as well, to be able to have this kind of conversation, because everyone go read the press releases, but it is neat also. You're up 12% today alone from this morning. So maybe we just keep you talking until close of market. How do you feel about streaming for the next 4 or 5 hours?
Right. Or days? I don't know. How long have you got?
Just bring me more coffee. I'll just keep yapping. But that is, sometimes the stock price doesn't mean anything. Sometimes it is valid, but it is the fact that over the last few days, the validation in the model and the analyst, acknowledgement as well. The fact that you're hitting all the milestones all along the way is very exciting. Give and take this overall massive theme of gold, of understanding the debt that's associated out there, the printing of money. We haven't even touched on that, but that's something most other people in this space, they're very well versed in the debt ceiling issues and real money conversation.
Yeah, for sure.
And if they want to get an asymmetric opportunity, you have to look at the equities, and then there's nothing better than there's lots of the free cash flow ones that have been having great quarters, but it's looking at companies that either are near assay results and producing something, or that are really near term to actual production, which attracts a different set of money as well.
Absolutely, for sure. And even in the last little while, I've been making sure that I understand what the criteria are for inclusion in the GDXJ, right? Because we're on the cusp of that. We're getting to the scale of that. And I'm also, it's a combination, I think, of the moment in the market. We've been talking about Western investors really paying attention to gold equities. So that moment in the market, and our moment as a company, so being right on the edge of production, getting to a certain market cap, those two things are coming together so that inbounds to me, are bigger funds, are it's a really interesting and exciting moment to see all of that coming in. And there's not really a lot of reason to believe that that's going to tone down. It feels like we're going to we certainly expect to keep delivering on this mine restart and get this thing ramped up and convince the naysayers and deliver it, and then see what else we can do to add or unlock value within the Madsen Mine or West Red Lake Gold. And then we've been talking about, the gold market is continuing, we think, to do its thing. And so it's pretty exciting to think about where this thing could go from here. We shall see. And there's always the black swan possibility and all of that. But it is a pretty exciting moment for sure.
A lot of things are lining up, and it's very cool too that you're going to have a bunch of naysayer analysts on the property, which is exactly where you want them. I just wish I just wish there was a camera there to
capture all of those
to
conversations.
capture that, add some more flavor and some more drama. Because I'm sure some of them, when they get there and they really they take it all in, and I mean they're looking at the data ahead of time. It'll be interesting to see how many are changed over. I mean, we'll eventually hear about it, but that will be very, very compelling, especially on the property, and they get to walk around and see.
It's so exciting, and I think it was really cool. Joe Foster of Van Eck. I mean, Van Eck has been a longtime shareholder of West Red Lake, and he's coming to site, and he was like, sorry if this is speaking out of turn, Joe, but he was saying, he's like, I've kind of drunk the West Red Lake Kool-Aid. I believe in you guys. And he was like, can you bring some other analysts who are less convinced than I am so that we can have some really good conversations? And I was like, absolutely. Perfect. And of course, I was able to reach out to several people who I've already been trying to convince, because that's, we're underdogs. We're out there we believe in what we're doing, and we are happy to take our technical approach to this project to anyone, because that's how technically and fundamentally driven we are. That's how much we know that we have based this project in real reason. And so we're happy to bring anybody to the project, any analyst to the project, Red Lake expert or not, and explain to them what we're doing and why we believe that it's going to work and where we think it can take the operation. So yeah, it'll be really cool to have that group descend on Red Lake in a month and embrace those conversations.
That's fantastic. Well, listen, I've got you for an hour here, and I should let you go because you've got a million things to do, but this has been great. Once again, it's a dramatic story that's ever evolving, and there's more drama to come, a month away. Never mind any news releases you're going to have in between then. So we really appreciate you walking us through the bulk sample, that validation, the latest news release, the exploration upside, where this is going. I mean, there's so many factors that I'm glad we were able to touch on, that to get out there to an audience that's hungry for some from near-term projects.
Oh, and there will be more. Don't worry. I'd say, we've put out 3 news releases in the last week, and I would say there's another couple weeks of news releases. My expectation is that I am going to put out some good news releases. There's a lot of news coming out. I mean, that's just the nature of starting up a mine, right?
Yes.
Is that there's a lot to say about what you're doing and why you're doing it and how what you're accomplishing, and where you're going next. So so stay tuned, because we don't expect to quiet down anytime soon.
Excellent. Well, that's great. Thanks so much, Gwen. Enjoy the rest of your day, and congratulations on all the well-earned achievements thus far, and the reflection in the market today of that as well.
Thank you so much. This was a super fun conversation. I hope people enjoyed it, and let's do it again sometime soon. Maybe after the next slew of news, and whatever else might happen in the gold market. We can talk about all those things.
Perfect. Well, there's 700 of you watching, so make sure you hit share and tell your friends, especially the ones who hate mining or say, no, there'll never be a mine there. Get them on, and they can send the questions in.
Fantastic.
Awesome. Thanks again, Gwen.
Awesome. All right. Take care, everyone. Bye-bye.
Take care. Bye-bye.